and welcome. Welcome to BCR's webcasting. I'm joined today by Simon Featherstone, who is the chairman of ClearFactor. Simon is a very experienced and well-known um, senior executive, shall we say, in the industry. Been in the industry for many years, and I've known Simon for much of that time. Simon, welcome. We are
Thank you.
talking today to Simon about embedded finance, um, and this will be in the run-up to our Receivables Finance International Convention, which will take place on the 9th and 10th of March next year. And Simon will be one of our presenters there. Simon, just give us your opinion and sort of broad overview of how digitalization, which of course is very much part of embedded finance, how digitalization is changing traditional invoice financing. People have been talking about digitalization for some time. Is it making a big impact? How are things changing in the sector with regard to that?
So for me, digitization started with, frankly, fancy websites. But the real challenge has been digitizing risk processes and the back end operational processes involved in factoring. That's where the really difficult tasks and thinkings had to take place. And embedded finance in that context is really about how do you give the micro and the small businesses of this world access to finance at a point of need without necessarily for them having to shop around, go to their existing bank. They've raised an invoice through their accounting online app, want finance there and then, click and get the money. And how do you get the processes that the industry has always remembered of? A salesman will call, somebody in risk will review lots of documents. You'll send the client 6 inches worth of paperwork. How do you get rid of that, digitize it, make it a really simple and easy process for the business owner to be able to get finance, ideally instantly, against an invoice they've just raised? And by embedding within another SME platform, then you're able to, if you're able to digitize the process, which is what we think we've been able to do at ClearFactor, then you can take the operating cost out, you can take the sales cost out, and make it, crucially, perhaps most importantly, make it easy for the SME to access finance. You'll remember many years ago, Michael, we were talking in Rome about the research I did as chief executive of Lloyd's invoice finance, and all of the UK's attitudes to invoice finance. How do you help eradicate some of the old adages around that? Well, you make it easy, simple, cost effective for smaller businesses. I don't think embedded finance is necessarily for the larger businesses, certainly at the larger end of the SME scale. But for smaller ones, it definitely steps in where traditional invoice finance struggles from a cost perspective.
So speed, ease of use, getting to those small businesses, these are all um, targets or goals that receivables finances have been trying to achieve for a long time. Why is it only happening now? Is it that the technology is only available now? Why is that the case?
I think certainly in technology, how do you reconcile digitally with e-money accounts? We've traditionally had one trust account at the factoring level, all the allocation issues and so forth. The ability to be able to provide thousands of effectively trust accounts, e-money accounts, as part of the operational process is one example of how things have changed. I think also small businesses themselves have got used to using online services, so their accounting platforms, payment processes. So the change in digitization across a number of aspects is making people much more comfortable being able to do things end-to-end online. I mean, at ClearFactor, if you approached us direct on our website, from application to cash, 4 minutes. Okay. And if, well, we all know.
As opposed to what in traditional factoring?
Even if I take Lloyd's or Bibby at our best, when I was running our businesses, you know, we're talking days, probably realistically a week. But crucially, part of the deal is it's single invoice. It's not tying them into contracts. It's not saying you will give me all of your future invoices regardless. Now that introduces us, those of your listeners who have got long distinguished risk careers and had some bad debt lessons, that introduces different risks. That's just not to say it's without risk, of course. But what we've managed to do is build some using some very experienced old school risk people from the industry, some algorithms, and automate if X and Y and Z equals yes, we will fund, no, we won't fund. Now, again, that removes, that creates what I call guardrails. So we set ourselves up in ClearFactor to do what the industry would call the simple, easy stuff. We're not looking to be doing kind of construction finance as a specialism or anything even remotely semi-contractual. It's the simple stuff.
Give us a real world example of how this has been used.
Yeah, a real world example is recruitment agency applies for a single invoice or wants funding against a single invoice, and we'll provide 90% of it immediately, the other 10% when the debtor pays. We did another one where it was somebody supplying a county council, which in itself actually had some challenges. But they were ones that came to us direct through the site. The embedded finance ones are where you would have somebody getting a backload, so a truck driver, a van driver doing a backload through a platform. Load boards are very common, as they're called in the US, but less well known here. Average invoice value is very, very low, about £150 across that platform, but it has hundreds of thousands of loads going through it every month. And therefore, the ability for that van driver, that truck driver, to be able to get access against the confirmed invoice that's delivered the platform, providing the purchase order, the proof of delivery, and the invoice details all in the platform. To provide finance against that, you've got to be able to do it digitally, because at that particular point, that's when the customer, the SME, the micro business, the driver wants the cash. That's cost effectively operationally, because you just can't do that in an old school process. It's just the invoice value is too low. You'd have to take all of the invoice value for fees, which is cost nonsense. So it allows you to scale up on much higher volumes, lower average orders, where there's good proof of debt that the industry would do all day long in normal case.
But in this sector, we know that single invoice financing is fairly high risk financing. So the debtor has to confirm before the invoice is financed. But what if you're very familiar, Simon, with what happens in receivables finance fraud? What if the seller and the buyer are working together in terms of defrauding the financier, so the purchaser would confirm the invoice and approve the invoice, but he might be working in cahoots with the supplier. So how do you get around that kind of situation?
You can't eliminate that risk entirely. I don't think the traditional industry, well, it certainly hasn't eliminated that risk. You have to build in, again, part of your risk algorithms are invoice values that are exceptional by size, frequency. And when you're part of platforms, you've got a much better history Of course, we're also using open banking, so we're able to go and check contras, things like that, within seconds using access to open banking. So there are different routes. Don't get me wrong, I don't think for one moment being embedded on a platform removes risk entirely. They're different risks, and you have to take that into account on all of this. I think the difference is if you do whole turnover, let's say a £500,000 haulage business, on a whole turnover basis, people go, well, I've got all of the turnover coming through. If there's a problem with one of the invoices, I'll get it back through the volume coming through elsewhere reserved, all the usual things people on your call understand. In this scenario, you have thousands of clients, hundreds of debtors. You will get the odd person who tries to collude, but within the platforms, particularly the ones we're working with where the purchase order, the proof of delivery, and the invoice and the confirmation are all in there, then I'm sure it won't stop fraud entirely, but I think it reduces the risk of it or the likelihood of it significantly.
What's the cost in these transactions?
So it's typically a fee of around 3%. We have some minimums in there because the average order value is relatively small. And then you've got an interest cost of between 10 and 17, 18%, depending upon the risk profile as we judge it. So we have different risk profiles in there, and depending upon the nature of the platform that we're embedded with, some of them, the risk profile, talk load boards, is much better than one or two others. But recruitment is another one where digitized gig economy recruitment business is working with us as well. Then the price will depend on our perception. So the fee pretty much stays the same, but the interest cost for the 45 days will be dependent upon our view of the risk across 5 particular buckets. And it's a collection of SME, debtor, and process. So how good is the process from a confirmation, proof, etc. as well?
Sure. Do you see this business remaining a fintech type business, or can you see the banks coming into this space?
I've met a couple of the UK's clearing banks recently, literally in the last week, and they would love to be able to try and do something like this. The challenge for them is the scale of the investment it takes and the time period. Having worked in those large institutions myself over the years, then trying to make change happen effectively, given the internal politics and process, is extremely expensive, but crucially just time consuming. And stakeholders change and investment priorities change, as I know all too well. And that's why kind of doing it properly ourselves, excuse me, I could see us licensing the software potentially to some of those banks at some point down the line, or white labeling it for them. But yeah, it's just a real challenge for them to get the, they tell me, to get the investment to do the process entirely digitally.
And who else is out there at the moment doing this? Is it just ClearFactor, or
So,
are there other players?
We believe we are the only. There are others that are attempting to do something similar. Probably Satago would be the one that I would call out. Market finance, or market invoice finance, as we all recall it. It just hasn't got there with the digitization in the same way we have end to end. Xero have got the accounting software, have got an embedded invoice finance proposition, but again, I don't believe, to the best of my knowledge, they've embedded all of the back end pieces that we have as well. There's an offer in there, but there's manual processes somewhere in the background.
So yeah, this is clearly something which is likely to take off and could be very big. I mean, ease of use. Okay, you can't say low cost, but speed and ease of use is so much in demand, especially with the kind of very small businesses that you mentioned. So it sounds pretty exciting stuff. Are there any regulatory hurdles that need to be overcome on this?
That's a really good point, Michael. So as ClearFactor itself is authorized with our e-money provider, that effectively the virtual bank account. So we have to go through lots of hurdles for penetration testing, because effectively you have access to the UK clearing system. So yes, you have to be authorized by the FCA, not in the context of doing factoring, but in the context of open banking access, moving money around and so forth, as an e-money provider in that context. So those are the reg hurdles. I think, if anything in my career, it's taught me to be respectful of the treating customers fairly at the smaller end, the micro SME end. But whilst technically they are businesses, in my opinion, they are more like consumers, and therefore you should always be respectful of the sort of the TCF and principles that the our regulators want us to adhere to there as well. So transparency of charges, making your terms and conditions clear, and so forth. I think one of the advantages, again, of having a process, end-to-end digital at Clearfactor is it's really easy to display the terms, your pricing, and so forth very transparently. There'll be none of the quote hidden fees that we would have remembered in a unfortunate way from the industry traditionally from 10, 15 years ago.
Sure. Simon Featherstone, thank you very much for your time today, and we very much look forward to hearing more about embedded finance in March, as I mentioned earlier, at Receivables Finance International. Thank you very much.
Okay. Thanks, Michael.